Kenya's National Bureau of Statistics has released results from its 2023 economic survey. The survey revealed that economic growth slowed in 2022 to 4.8% from 7.6% for a number of reasons, weather being chief among them. Joining us to discuss further, Ibukun Omoyeni, Sub-Saharan African Economist for Vetiva Capital Management. Ibukun, good morning to you. Thank you so much for joining us. First off, what's the difference, because you were with us when we went through Ghana's GDP figures for the third or fourth quarter, and that was pretty in-depth. This is a survey. What's the difference between a survey and an actual GDP report? Okay, so the economic survey is a mix of several things. So usually a GDP report covers just the real sector, right? While an economic survey covers the real sector, fiscal sector, monetary sector, external sector. So it's all encompassing. It just provides summaries on all those sectors of the economy. So that's why you see that the GDP results, we didn't really see the proper breakdown. We just saw a commentary about a paragraph or two paragraphs on how GDP performed in Kenya. So, I mean, what do you make of it? I mean, look at this figure, 4.8% compared to the 7.6% that we saw in the prior year. Well, I mean, what do you make of that slowdown there? I think the slowdown is expected because 2021 was recovery from the pandemic. So it's obvious that 2022 there will be a slowdown. Slight slowdown. So we think beyond that, you're also seeing issues around some other sectors of the economy, which we'll come to later. But Kenya basically is one sector that grows by 5%, 6%. That's the normal range. And in fact, the Kenyan government or Kenyan Bureau of Statistics was expecting around 5% thereabout. But of course, due to the slowdown and as well as underperformance of other sectors, that's why you are seeing a slower growth in 2022. You had a forecast, yeah? Was yours close to what this was? Or so ours was 4.5. 4.5, okay. We had envisaged that due to this dragging growth in Q1 and Q2, expected it to reflect further in Q3 and Q4. So that was why we actually were quite modest with our expectations. So that's what we see. Okay, so I think we need to revisit this. When an economy is slowing at this pace, what's the impact on the people themselves, on the populace? Okay, so when an economy is slowing, right, if there's no base effect, right, like it happened last year, if there's a slowing impact, it could be because of high inflation or due to unemployment. So there are several things that could cause an economy to slow. For example, in South Africa, when you had the issue of riots, those are factors that could cause the economy to slow. When you have Nigeria cash crunch, right, we're still expecting the Q1 GDP figures for Nigeria. We expect that the cash crunch will have a significant impact on the economic activities in Q1. That's the Naira redesign, right? That's for Nigeria. Right. So when you have those kind of events come to play, you definitely see a slowdown in the economy. That affects people, actually. So agriculture, according to the survey, agriculture, fishing, and so on, forestry, contracting by, I think, 1.6%. In prior year was 0.4%. The contraction was 0.4%. What was this, the drought, or what's it? Exactly. Kenya is undergoing some drought. And I think that's the reason why you are seeing that decline. The agricultural sector normally should be a resilient sector. Exactly. In Nigeria, even during the pandemic, we grew because definitely, even though there was no economic activity in industries, you still have to grow food. But because this one is caused by, of course, factors outside the purview of government, right? Climate change, and that's what is driving agriculture down in Kenya. Okay, so you mentioned the magic word, though, the magic two words there, climate change. This is likely to bring up these conversations around how climate change is impacting these nations. I mean, is it alarmist, or is it factual, or is it, are climate activists again just going to use this to further their discussion points? What do you make of this whole climate change discussion? Well, due to Kenya's location in the world, right, it's close to the equator, and you definitely have a lot of heat around that. So I think that's one of the reasons that's one of the things driving droughts in Kenya. And in fact, this drought didn't just start. It has been there over the years. But I guess it became more pronounced. So I think that's the key. So it's beyond the whole narrative around climate change. There's actually a reason behind that consistent drought. And that's because of its close position in the near equator. So they have to look for other means to actually ensure they can mitigate this, right? So, but I think most of these agricultural sectors, they are usually informal. So I guess we don't have enough formal investment and around irrigation and the likes, try and mitigate the impact of climate change on the area. Yeah. You literally just preempted my next question. So as much as I thought Kenya's has double-digit contributions to the economy, same thing with Nigeria, but this issue of informal and subsistence farmers, the farmers that only make enough food just to feed themselves. It looks like that continues to be a drag. The sector could be bigger if we could formalize the sector.
Formalize it, yes. I think that's one thing Africa needs to look into, really. If they can formalize the sector so that there will have been ways to mitigate this risk if the proper structures put in place. But I guess it's still a challenge. And that's why you are seeing this impact the economy badly.
As far as the sector highlights, I think, I don't know what you make of this. Finance and insurance, 12%. Information communication, 9.9%. Transport and storage, 5%. Okay, there they are, 5.6%. Or what do you make of these sectors, at least in positive territory? So
usually the services sector are usually the fastest growing across all African economies, right? You find that service sector is larger, except for maybe South Africa, that's a large manufacturing sector, right? It's actually, service sector is actually larger, and that's why you see that growth, right? From finance to ICT to transport. Kenya is one economy that you hear the issue of mobile money, right? So there's a lot of innovation going on in the tech and finance space. So that's why you're still seeing solid growth there. But the core agriculture, because of the challenges, that's why you're seeing that slowdown. But if you look at the results, the service sector grew the fastest in 2022.
I want to ask you about debt. Debts as of January for Kenya, I think about 37.6 billion or so. The stress that this is placing on the country's finances, how pronounced is that? Because it looks like that continues to rise.
Okay, it's even more difficult in a situation whereby you can't raise external debt, right? You can't even raise more debt. Like roughly since about Q2 2022, no Sub-Saharan African nation has raised international debt when it comes to Eurobonds because of the high interest rate. The Fed keeps raising interest rate, and this makes debt more expensive. So for government finances, they have to ensure they keep their deficits within a limit. They ensure they don't overspend. They don't, of course, borrow ways and means like Nigeria do. So you want to keep because they don't have many options. It's not an oil producing country.
Right.
So they are at the end of high oil prices. They are at the end of a lot of other factors that mitigate against their revenues. But they have to ensure that they keep deficits within a limit, probably within, I think, 3 to 5% or thereabouts. So I think that's how it can actually mitigate the impact on fiscal deficits.
Okay, so fiscal deficits, what does that put the Kenyan shilling then, and the pressures that the currency is facing?
Because for the Kenyan shilling, like I mentioned earlier, that Kenya is not oil producing. They're majorly net oil importing country. Yeah. And at a point, we discovered that Kenya had to engage in what we call government-to-government contracts in order to import oil. So instead of conducting weekly FX auctions for importers to get FX, the government-to-government contract that would last longer so that you can buy the oil in advance and pay over time, and that would reduce the weekly pressure on FX. So we've seen those innovations come out of Kenya in a bid to moderate the FX pressure, similarly to what Ghana did when it was being good for oil. So, of course, we are seeing that pressure on the Kenyan shilling because Kenyan shilling, at a point in February, they said it went on a 60-day depreciation. It was the longest streak ever in the history of the Kenyan shilling. So most African currencies, especially non-oil currencies, are experiencing that depreciation due to high oil prices and the high interest rates.
Lots of pressure. So you are William Ruto, you've got high debts, you've got a weakening shilling, you've got slowing economic growth. Inflation still up there. I think they have been decelerating a bit. What's the way forward for the president?
Of course, it has to be reforms. So you have to look at, is there any reform that needs to be carried out? Is there any plan that has to be put in place in order to look at the challenges, basically, and see how you can insulate your economy from the global headwinds. But majorly, if you look at the way things are right now, a lot of things are stacked up against emerging markets, especially for the ones that are not oil producing. So they will have to be more innovative and look inwards and see what they can actually do. So it's not an easy time to be a president, really.
I can imagine.
You have to be.
Gosh.
You have to be on top of your game.
Yeah. We're still seeing rate hikes. We're just talking about the US last night. We're going to have the ECB, of course. What's that? You mentioned things being stacked up against emerging markets. What added pressure do these rate increases by central banks in the West have on Kenya, and Nigeria, or these other countries? Okay,
so when central banks in the West, when you raise interest rates, right, this directly affects other dollar instruments, right? The US government, for example, issues dollars. That's its major currency. So US increases interest rates. What that means is that every other asset would react to that adjustment. And once Eurobonds yields rise, right, if you want to borrow from the market, you have to place your rates close to the Eurobond rate, whereas people won't buy. So that's the major headwind, right? And you cannot borrow this at this high level. It's not sustainable. That's why you see a lot of emerging markets claw back on borrowing, and that actually affects their economic performance because they don't have the capacity to borrow at a very high interest rate. So it's best they just stay put, probably reduce expenditure, try and raise revenue by increasing taxes locally. But overall, if you don't have a sharp current account, that is, if you don't export more than you import, like the likes of Brazil and the likes Russia and could have huge export base, you would actually be going through a lot now because you can't get money from debt. You have to get money from your exports, right? You have to export more, get more FX, and that's the way you can survive the turmoil.
So overall, what's the outlook for Kenya then? How are things looking out for them going forward?
So Kenya is expected to grow by at least 3 to 5% this year, depending on the way things go. Looking at, of course, the major drag in Kenya is the agricultural sector, and you can't really predict how things would go. You don't know how severe the drought will be this year, so it's a bit uncertain. But Kenya is one economy that is resilient. It has broad-based growth, and if we see better performance from the agricultural sector, that could push growth beyond 5% once again.
You know, I want to take us back to this Senate in Nigeria and Ways and Means, because there's something you said about rate hikes in the West and pricing for borrowing. Can the government in Nigeria dictate the interest on the Ways and Means that it has, which again, as we've established, is against the law, violating the CBN Act, right? But going forward, this 40-year bond that it wants to use to commercialize the Ways and Means, can you dictate the rate to the market at which they will buy that bond?
Well, we'll say the terms are not yet clear.
Okay.
Right? We still need more information for more clarity. Why? Because it depends on how the CBN would want to issue this bond. Will you want to go through the banks? Will you want to go through pension funds?
That's commercial banks in Nigeria, right?
Yes, it depends. We have the issue around CRR.
Yes.
Right. So we don't know the route through which the bank, the central bank would take it through. But of course, when you add the Ways and Means to your debt, right, it's going to be massive. And if you compare the debt service to revenue,
that was at 90-something% already.
Yeah, so you need to take some very hard decisions by probably removing subsidies, because at this point, that one it just has to go. It just has to go. So looking at whether the government can determine the rates, the terms are not yet clear, right? But usually you would see participants. Of course, they would have to show interest, right? If you want to offer it, and they have to show interest in it. So it also depends on the prevailing market environment, right? If interest rates are rising in the market, right, and you want to bring in that bond, would they be willing to take it up? So that's why I say it also depends on how they intend to go about it. So once we get clarity on the terms, then we'll be able to comment further on how that will be possible.
Thank you for the insight. Rates are rising. We still have the U.S. raising rates and all the other central banks that we're seeing things. Very, very interesting discussion. Ibukun Omoyeni, Sub-Saharan African Economist with Vetiva Capital Management. Thank you so much for joining us to talk Kenya and chiming in on this Ways and Means development in Nigeria. Appreciate your time.